All right, welcome to Money Chat Now. I am your host, Larry Steinhouse, and today is October 13th, 2021. Hey, just a reminder, if you like the show, hit the share button. Nah, forget it, even if you don't like the show. Just hit the share button. Do me a favor, if you're watching the show, hit the share button. I'm going to say it one more time. Hit the share button. Also, do me a favor and hit the like button so I know you like the show, because if you like the show, I'll continue to do it. If you don't, I'll just talk to myself and you guys can't listen anymore. So hit the like button, hit the share button. Also, you can comment live during the show on YouTube and Facebook and LinkedIn and Twitter. So make sure you do that as well. I may even be able to answer some of your questions. If you have a quick question or a quick comment, I may even highlight it on the show. Don't forget to subscribe to YouTube channel and like the Money Chat Now page on Facebook. Money Chat Now, of course, is brought to you by Investor Schooling. You can attend a complimentary class this Thursday, tomorrow night actually, by going to investorschooling.com. You will learn about real estate investing and stock options trading from those who do it every day. All right, on today's show, we're going to be talking about the market update. We're going to be talking about the fact that the Fed is tapering. We're going to be talking about the inflation report, J&J's booster, JP Morgan's earnings, Delta's earnings, and what these mean to you. And of course, we'll be getting into the wrap up, and I have a little special thing I want to talk about at the end too, which is kind of cool. Let's talk a little bit about the Dow, the S&P, and the NASDAQ today. What in the world? It was another bipolar day in the market today, as the Dow swung violently from down about 150 points to up about 100 points and finished. It was actually a second ago. I actually looked at this a second ago, and it was up 1/4 of a point, and now it's actually down 1/2 a point. So it really didn't do anything, which is kind of weird. The S&P actually finished up above 13 points, plus 13 points, and the NASDAQ up 105, but of course, my Apple stock went down, so, oh well, it is what it is. Let's talk a little bit about the Fed tapering. So, it's interesting because you can actually see the moment the Dow started coming back was as the bond market dropped on the news of the Fed tapering. So the bonds are up, hit about 1.7, and then dropped as low as, let's see where it is right now, actually 1.5. So it's actually interesting. You can actually watch it. If you actually want to take a look at the chart, you can actually take a look at the charts of the bond market, take a look at the chart of the Dow, and you'll actually see where the two of them converged or actually changed each other. It's all right. We can't show it right now. It's too complicated to bring it up. But let's talk a little bit about what's happening with the Fed. So unless you're completely financially illiterate, well, I guess you are if you're an American. Oop, did I say that out loud? I was just thinking that. Oop. You must know that the Federal Reserve has been infusing money into the economy at staggering rates. And this has caused interest rates to drop on the new normal of 0 for a while. And obviously this is an unsustainable method of fixing the economic problems we face when the world shut down because of COVID government overreach. So what's happening is something that should have happened a while back or a long time ago. The Federal Reserve is going to cut back on the infusions of money. They are saying this can and will happen as early as November. A recent meeting of the Fed presidents has reached the conclusion that as a country we no longer need economic stimulus. I think that's certainly true. One of the stimuluses was the Fed buying bonds that was sold by the banks. These bonds would make the banks more stable, as well as give them more money to sell to their customers. When I say sell, I mean lend, of course, because they're actually lending to the customers. And if the banks can lend money at 0%, if they can borrow money at 0% and they can lend it at 3.5%, they make a great profit. This, by the way, is called arbitrage, and it's an amazing formula to make lenders lots of profit. By the way, not only is it a great way of making profit, but the word arbitrage just sounds so awesome. All right, everybody say it with me. 1, 2, 3. Arbitrage. Come on, one more time. Arbitrage. Isn't that a cool word? I like that word. Anyway, the Fed will be cutting back, and this cutback may slow or stop the imminent inflation hikes. And by the way, of course, inflation is caused by too many people having too much money and wanting products in short supply, like houses and cars. When the rates to buy these items on credit go up, the price of the items will stabilize or fall, except of course for student loans. These will never change, and unfortunately too many are ripped off by this. But hey, that's another story, and I'm not going to go there today. So let's talk about the inflation report. And U.S. inflation accelerated last month and remained at its highest rate in over a decade, with price increases from pandemic-related labor and material shortages rippling through the economy. Yes, folks, the government is crashing our supply chain and our access to goods, so the price of these goods will keep going up. Unless, of course, you could swim out to these ships that are in the bays full of all the goods that no one else could sell while they're there. I bet you we can make a lot of money swimming out to these ships and bringing the goods back. Anyway, the inflation numbers came in at 5.4%, according to the Labor Department. This is the highest number again in 10 years or more. The price of everything is going up. Cars, houses, food, gas, etc. are all being hiked, and this will put a strain on some people whose income isn't increasing as fast. Now, I have rental properties, and I will tell you that I'm a big fan of inflation because my properties go up in value, and of course my rents go up. So I just make more money. So if you guys want to continue to make me richer, go right ahead, government. I appreciate it, as always. But interesting that many incomes are rising, and the biggest joke is the $15 an hour advocates. Remember how they were pushing for $15 an hour minimum wage? Well, many restaurants and fast food places are wishing they could find people to work for that low rate. For all of you who are in the rating, who are in for the rate increase, and what you're living in now is what us entrepreneurs call trickle-down economics. You know, when an employer makes a lot of money but needs to hire people with limited skills to perform the selling and manufacture of those products, and has trouble finding people, so they need to pay them more. Yes, that's called trickle-down economics, people. So, you know, it is actually real. Anyway, trying to explain math and economics to someone who only cares about mean tweets and orange hair will probably always be difficult, so I won't even go there. Let's talk a little bit about J&J's booster shot. Clearly, the powers above, you know, the owners of Moderna and Pfizer and their political friends are trying very hard to poo-poo J&J and their vaccine. J&J is the company with the one shot, and frankly, from what I've seen in friends, it's also the one with the least side effects, while the other big boys are two shots, and as they claim to be, effective in avoiding COVID. Today, a study came out that said Johnson & Johnson COVID-19 vaccine recipients are better off getting a booster shot from Pfizer or Moderna, and this was done by a highly anticipated study. A highly anticipated study? Really? Were you anticipating this study? I know I wasn't anticipating this study. Anyway, the study had volunteers that were divided into groups and received an extra shot of the original vaccine or a booster shot from a different company. All the combinations boosted antibody levels higher, though Pfizer's and Moderna's boosters appeared to work best. Ooh. People who received a booster dose of either the Moderna or Pfizer vaccines had a 4-fold increase in their antibody responses more often than those who received an extra dose of J&J, according to the study. So in other words, they didn't say, hey, these many less people didn't get COVID. They're saying that they had a higher antibody response. Anyway. By the way, the study was not peer-reviewed yet. What? What does that mean? It means that the Wall Street Journal and others can print this article and not be held to any facts. Or it really means that someone is trying to booster shot Moderna and Pfizer stock today on the day that J&J was supposed to get approval from the FDA about their booster shot. I love blatant stock manipulation. It's just fascinating, isn't it? I just wish these guys would call me and give me the heads up when they're going to do it. As far as J&J stock goes, it actually popped today about 1.5 points on the news. Why? Frankly, I don't know, but I'd bet it's because it's a tell, along with this article, that the booster will get its FDA approval this week, and earnings for J&J are next week, so I'm going to tell you right now, this is a play. Hey, let's take a minute, and we'll come back, and I'll tell you more stuff. Okay, we'll take a minute now.
Okay, so you've thought about investing in real estate, houses, apartment buildings, properties, but don't really know where to start? Well, what if you could very easily learn how to gain strategies to use other people's money to buy and sell houses in the Philadelphia area? If you could learn and network with successful area real estate investors and how to produce monthly income on rental properties without headaches, that place is Investor Schooling. With Investor Schooling, you'll learn from 2 Philadelphia area rockstar real estate investors, Phil Falcone and Larry Steinhouse about how to buy and sell properties the easy way and teach you basic and advanced techniques to help you make money in real estate. You can attend investor schooling in person or online visual classes 8 times a month. You can and will learn how to make money in real estate. Call for free information and get a complimentary pass to one of these classes. But don't delay, as these complimentary passes are limited. Call the number on your screen now or visit investorschooling.com. investorschooling.com.
All right, welcome back to Money Chat Now. I am your host, Larry Steinhouse. Hey, if you're watching this show, hit the share button right now and share it on your screen. Also hit the like button. Let me know you like it. And of course, you can leave comments on the Facebook, on the YouTube, and on the Twitter channel and LinkedIn. Just leave comments. Let me know you're watching the show. If you have something you want me to mention, I'll try to do it as well. Okay. We've also been discussing the Fed tapering and how the fact that they're not going to be infusing the market with money anymore. We talked about the inflation report, highest inflation in 10 years. We talked about the J&J booster and how, I don't know, how the other companies are saying that their booster is better than, your booster's better than mine, na 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 na. I mean, whatever. Okay. We're going to be talking a little bit about some earnings. So let's talk about some earnings and what's going on in earnings, because that's important and we need to know what's happening. So let's talk about JP Morgan's earnings. So first of all, here are the numbers. So JP Morgan did $3.75 per share versus $3 a share, which was the estimate that was surveyed. The revenue was $30.44 billion versus $29.8 billion. So they beat and beat, right? It was also boosted, this is weird, it was boosted by better than expected loan losses. That's a weird statement, right? Better than expected loan losses, but that's the way it is. They lost less on loans than they expected. Okay. This sounds weird, but understand that all banks are expecting losses on a percentage of loans, and with COVID, I mean government overreach, of course, the banks had higher than normal expectations of loan losses. So they got less. They simply lost less on these loans than expected. And actually, I'm going to say something interesting. It's actually a promising sign, at least for now. You know, we all thought the housing market was going to crash, and there could be lots of foreclosures. I don't really see that, at least not yet. I see it in about 2 or 3 years. I don't see it right now, but not necessarily because of the COVID and government overreach. Mostly because of the inflation and what's being caused. So it's kind of like a secondary problem. The stock, however, JP Morgan stock, didn't appreciate the expectations as much as the news did. The stock is actually down 2.5% and down about 10 points off its recent highs. More bank stock earnings will be tomorrow as Bank of America and Wells Fargo deliver their earnings report in the morning. I'm actually expecting the banks to do well. However, the stocks may just fall, just the way JP Morgan did, just on the decline in interest in the stock. And of course, the shiny object syndrome money managers go to, because they go to other stocks for profits as these approach earnings as well. Let's talk about Delta, because that's another head scratcher. Delta Airlines reported a quarterly profit and higher than expected revenue for the third quarter. So what did they do? They get a higher profit, they get a higher quarterly revenue, and some idiot, it's usually the CEO, says, but we're going to warn you that more expensive fuel will pressure its bottom line in late 2021 despite improving travel demand. Seriously? Really? That's what you're going to do? You're going to talk about fuel costs? Do you understand what's going to happen? You're going to raise your rates just like everybody else, and you're going to charge. You're going to make more money on the same cost of fuel. And in fact, if fuel goes down, you're only going to make more money. And if there's so much more travel and pent up demand, and people like me who won't travel because of the moron in the White House's mask mandate, just wait till that all goes away. There will be much more people traveling, and they're not going to care anymore. At present time, we're expecting a modest loss in the fourth quarter, CEO Ed Bastian said on a quarterly call with analysts on Wednesday. Delta's third quarter profit of $1.2 billion, which was down 19% before COVID, right, 2019, and its second profit since the pandemic, but the first one without U.S. aid. So they're saying, hey, we finally made money again. Delta and other airlines had received billions of dollars in federal assistance to keep them afloat during the crisis. Delta's revenue of $9.15 billion also exceeded analysts' expectations of $1.4 billion. They did pretty good, man. They did 8% better than expected. Here's how it performs. The adjusted earnings per share were 30 cents versus 17 cents. So they actually, this is just, I love earnings reports like this, so I don't understand it. They did 30 cents versus 17 cents, and the revenue was $9.15 billion versus $8.4 billion. Again, this is great news. I'm super surprised that the stock was down today almost 6%. I don't understand. What does Wall Street want anyway? It also took down American Airlines, who was also down 3% on the report. And AAL, by the way, reports earnings next week, and hopefully it will rebound into the 23 to 24 range, so I can get out of my stock options with a damn profit. Man, I hate that. All right, let's take a quick break in a few minutes. We're going to come back, and we're going to talk about, I have a special thing I want to talk about, and we're going to talk about what I think the market's going to do and how much money we're going to make. I will see you in a couple of minutes. Investor schooling needs a new slogan.
Investor schooling? Never heard of.
Investor schooling?
Never heard of.
Investor schooling? Never heard of them.
Any suggestions? Phil?
Investor schooling. We never heard of you either.
Investor Schooling. We never heard of you either. Register for a free class at investorschooling.com.
Investor schooling. Those guys are everywhere.
Investor schooling? Those guys are everywhere.
Investor schooling?
Those guys are everywhere.
Investor Schooling. Those guys are everywhere. Register for a free class at investorschooling.com.
Welcome back to Money Chat Now. I am your host, Larry Steinhouse, and so far we have been discussing the market update. The market did nothing. It actually just kind of opened where it closed. It did nothing, except the S&P was up 13 points, but the NASDAQ was up 100 points. That was pretty cool. We talked about the fact that the Fed is going to stop putting more money into the economy, which I think is actually a good thing. I know it might affect the market for a little while, but I think it's a good thing. We talked about the fact that inflation has been the highest in 10 years. We talked about the fact that Moderna and Pfizer are saying their booster is better than J&J's. Stock manipulation makes me crazy. We also talked about JP Morgan and Delta Airlines earnings being great, but the stocks did not like the earnings. I don't understand it. All right, I want to talk about something near and dear to me. I want to mention that Captain Kirk, William Shatner, got to go into space today with Jeff Bezos. That is so freaking cool that Captain Kirk got to go up into space. The actor, of course, William Shatner, said that the space flight was unbelievable. And check this out. This is just really funny that he would say this. And something that everybody in the world needs to do. Come on, really? Really, Shatner? Everybody in the world needs to do it? I don't disagree with you, but do you realize that who you are and why you got to do this? All right, anyway, but it's just kind of funny that he said that. But if you really want to find something interesting, look up the interview with Bezos and Shatner on either CNBC or other places. It's an emotionally charged interview with Shatner, and he's on a high as he discusses his experience. I'll tell you, it was really, really cool. What an awesome experience, and how wonderful it must be that this guy at 90 years old can do this. Man, what a life, man. Hats off to him. I remember reading the fact that he was doing Star Trek, and then after Star Trek, he was living in his car because he had no money, and his wife divorced him and took all his money. So this guy has, bounced back, obviously, but it's just amazing. All right, so earnings season continues this week as we await key earnings from the banks tomorrow. I'm a little nervous about this earnings season. It kind of feels like, it feels kind of light to me. Of course, we have big tech coming at the end of the month. And I think it's going to also do the same thing. I think it's going to boost up right before, and then it's going to kind of drag down the market, and then slow decline will begin. And look, I'm telling you, as I said before, I really think we are at the top right now. We need to start, it's going to start to taper down the market. And by spring, we're going to be in the probably new normal of 28 to 29,000. Anyway, oil and gas stocks should also be positive as President Braindead has paved the way for energy and oil stocks to skyrocket with his dumb decision to stop the pipeline and give all oil production back to the other countries that will hold us hostage with their price gouging. So prepare for $6 and $7 gallon oil. It's definitely coming because these countries are going to say, This guy is such a dumbass. Oh, or he's actually going to say, hey, he's got all the stock in our company, so we need to make some money. All right, anyway, as I mentioned on other days, Oxy and Halliburton are some of my plays. I have some Halliburton stock, and I sold the covered call, and then I bought it back at 98%, so it was a pretty good thing. I'm actually going to hopefully sell it tomorrow. Of course, I want to thank you for watching Money Chat Now. Did you hit the share button yet? Come on, share it. Share this gold. Hit that like button. Let me know you enjoyed the show. And, of course, don't forget to subscribe to the YouTube channel and like the Money Chat Now page on Facebook. From time to time, I own some of the assets and options discussed in this show. The opinions discussed in this show are solely mine, and no one has asked me to discuss them. And I want to thank you for watching Money Chat Now. We look forward to your continued support. We will see you tomorrow and every day at 4:03 p.m. Take care, guys.